What is a bond? How do bonds work? What are the risks and benefits of investing in bonds? Are essentially debt securities that are issued by governments, corporations, or other entities in order to raise capital. When you buy a bond, you are effectively loaning money to the issuer for a predetermined period of time, and in exchange, you receive regular interest payments until the bond matures. At maturity, the issuer is obligated to repay the principal amount which he borrowed. Funds. Governments need funds to build infrastructure projects like roads, schools, and dams. To get the money for these projects, they can borrow by issuing bonds to investors. Investors get interest payments, while the government gets the funds to pay for the projects. This helps spread out the cost and avoid raising taxes or cutting other programs. However, it also comes with risks if interest rates rise or the government's creditworthiness is questioned. Similarly, corporations will often borrow to grow their business, to buy property and equipment, to undertake profitable projects. Large organizations may struggle to get sufficient loans from average banks, due to their complex financial structures and significant debt. They may need to explore other financing options, such as specialized banks, private equity firms, the bond market, or issuing securities to investors. Bonds allow organizations to borrow money from a large pool of individual investors, which providing access to diverse funding sources and longer maturities. For investors, bonds offer a low-risk investment opportunity with regular income and diversification benefits. How bonds work. When companies or other entities need to raise money for new projects, maintain ongoing operations, or refinance existing debts, loans, these bonds are raised. For investors, bonds offer a relatively low-risk investment opportunity, as they are backed by the issuer's promise to repay the principal amount and interest payments. Bonds can also provide diversification benefits, as they can be used to balance the risk and return of other investments in a portfolio. The borrower, company, issues a bond. That includes the terms of the loan, interest payments that will be made by organizations, and the time at which the loaned funds, bond principal, must be paid back, maturity date. Principal plus interest plus profits of resale equal to maturity amount. The interest payment, the coupon, is part of the return. That bondholders earn for loaning their funds to the issuer. Coupon, which means interest rate per year.
Benefits of bonds.
Receive income through interest. Hold the bond up to maturity to get all principal amount back. Profit if you resell at higher price.
Disadvantages.
Yes. One disadvantage of investing in bonds is that they have a fixed maturity date, which means that investors must hold onto them until they mature to receive the full principal amount back. For long-term bonds, this can take several years, typically between 4 to 10 years or more, depending on the specific bond. Here are some other disadvantages of bonds. Interest rate risk. Bonds are subject to interest rate risk, which means that their value can decrease if interest rates rise, as newer bonds with higher yields become more attractive to investors. Liquidity risk. Some bonds may also have limited liquidity, which means that it may be difficult to sell them quickly at fair market value. Overall, bonds can provide a reliable source of income and a lower-risk investment option, but they do come with certain drawbacks that investors should consider before making investment decisions. Consider the case of XYZ Corporation. XYZ wishes to borrow 100 crore to finance the construction of a new factory, but is unable to obtain this financing from a bank. Instead, XYZ decides to raise the money by selling 100 crores worth of bonds to investors. Under the terms of the bond, XYZ promises to pay its bondholders 5% interest per year for 5 years, with interest paid semi-annually. Each of the bonds has a face value of 2,000 rupees, meaning XYZ is selling a total of 500,000 bonds.